Hello everyone. So today I will introduce about the purchase order. Alright, purchase order is a commercial document and first official offer issued by a buyer to a seller, uh, indicating type, quantity, and price for the product. Okay, so it is used to control the purchasing of product and services for external supplier. So let's go. We try to get the example purchase order, right? Alright everyone. We proceed to the purchase order. Purchase order, we need a timetable, right? We need have a timetable. So in the timetable, we need to the supplier name, buyer name, address for the supplier and buyer, date and the quantity, description, unit price and amount. And below, for the timetable, we need have a total, right? So this is a purchase order. So so alright guys, we proceed for the number 2. Number 2 is a invoice. Invoice is a bill. Bill is a document issued by a seller to a buyer. Alright. Is related to a certain transaction and indication the product, quantity and price. Alright guys, for the invoice, tax invoice, we need have a title, big title invoice in upside. Alright, so in the below of the title, we need have your company name, address, your email or what, and your numbers telephone. Alright, in the timetable, we need discrimination, yes, sorry, and unit cost, quantity and amount of the item. Alright, so for the below the timetable, we need subtotal, we have a subtotal and amount, full amount. Alright guys, we proceed to the timetable for the invoice. Alright, so let's go. Alright, this is a timetable for the invoice. Sorry for the text because it's so lazy. Alright, in the left, we need to the your company name, right, and address company and contact, number telephone. Alright, this for the right invoice. Alright, below for the name of company, we need have to bill to for the customer. So we need contact name, address, phone and email. This ship name of name or department, address and phone. Alright, so for the timetable, we need a description, quantity, how much, and unit price, how much, the item, total. Alright, when you total all the items, alright, we need to write subtotal, discount how much if have, tax rate, total tax. Alright, and in the last, we need balance after we we do all this. Alright guys, we proceed for the number two. Number two is a invoice. Invoice is a bill. Bill is a document issued by a seller to a buyer. Alright. Is related to a sales transaction and indication the product quantity and price. Alright guys, for the invoice, tax invoice, we need have a title, big title invoice in upside. Alright, so in the below of the title we need have your company name, address, your email or what, and your numbers telephone. Alright, in the timetable we need description, yes, sorry, and unit cost, quantity, and amount of the item. Alright, so for the below the timetable we need subtotal, we have a subtotal and amount, full amount. Alright guys, we proceed to the timetable for the invoice. Alright, so let's go. Alright, this is a timetable for the invoice. Sorry for the text because it's so lazy. Alright, in the left we need to the your company name, right, and address company and contact, number telephone. Alright, this for the right invoice. Alright, below for the name of company we need have to bill to for the customer, and so we need contact name, address, phone, and email. This sheet name of name or department, address, and phone. Alright, so for the timetable we need a description, quantity, how much, and unit price, how much the item, total. Alright, when you total all the items, alright, we need to write subtotal, discount how much if have, tax rate, total tax. Alright, and in the last we need balance after we do all this. Alright guys, we proceed to the number 4. Number 4 is a good receipt. Good receipt are the record of a good at the point of receipt. Alright, this record is used to confirm all goods have been received and often compared to a purchase order before payment is issued. Alright guys, this is an example item for the good receipt. Alright, so please stand by. Alright guys, this is the example. We need F to the title good receipt in the website. Alright, so we need a name of supplier, day, advice note number, order number for the good receipt date, delivery location. Alright, so we need a timetable. This a basic timetable. This is number unit 1, 2, 3, 4, and 5. So this goods is items, right? So item example, you put Item you put book. Alright, and the price is RM16. Order quantity. Alright, how much order quantity for the good receipt? So example, I put 4. Alright, comments for this goods. Alright, comments, we put the book is also great. Great because when I read, I like it. Alright, example. Alright, this is the example for the code receipt. Alright, so yeah.
Hi guys, Assalamualaikum. My name Ain Nur Fatihah binti Muhammad Kasirul Aziza. Okay, I want to explain what is credit notes, debit notes and payment voucher. Let's go. First of all, I want to explain what is a credit notes. A credit note is also known as a credit memorandum. On the credit note, the supplier will list the products, quantities, and products or service prices that we agreed upon by both parties. It will normally reference the original invoice and state the reason for the credit note. The credit note can be provided to the customer as money or, as usual, it can be applied to future purchase. This example for credit notes. After that, I want to explain what is a debit note. A debit note is a document used by a vendor to inform the buyer of current debt obligations, or a document created by a buyer when returning goods received on credit. The debit note can provide information regarding an upcoming invoice, or may serve as a reminder for funds currently due. For items bank return, the total anticipated credit amount may be included, along with an inventory of the returns item and the reason for the return. This debit note example. Last but not least, I want to explain what is a payment voucher. Payment voucher is a document which can be used as proof that a monetary transaction has occurred between two parties. In business, the payment voucher can be used for a variety of purposes, sometimes taking the place for cash in transaction, acting as a receipt, or indicating that an invoice has been approved for payment. This example for payment voucher. That's all from me. Thank you for watching.
Hi, Assalamualaikum. I'm Farahas binti Majizat from BA 1111F. Today, I'm going to explain about 3 things, which is cash receipt journal, cash payment journal, and general journal. Okay, first I want to explain about cash receipt journal. The function of cash receipt journal is to record all cash received from any source. source document. For example, the most common are the receipt and the cash register summary. And all cash received by a business should be reported in the accounting record. Second, cash payment journal. The function of cash payment journals is to record all outflow of cash from the business for any purpose. For example, payment voucher and check back. Lastly, general journal. General journal used to record the following that do not belong in any of the special journal, such as the purchases, sale, cash receipt, and cash payment journal. So that's the three types of journal.
Sales journal. Sales journal is subsidiary ledger used to store detailed sales transaction. The main purpose is to remove a source of high volume transaction from the general ledger, thereby streamlining the general ledger. The following information is typically stored in the sales journal for each sales transaction. The first one is transaction date, account number, customer name, invoice number, sales amount. Purchase journal. Purchase journal are special journal used by an organization to keep track of all the credit purchase. Office supplies, service and goods acquired for resale are recorded in the purchase journal.
Written outward journal. Explanation. Written outward journal, or also known as purchases written, is the goods written by the business organization to the supplier. They are goods that were purchased from suppliers. However, because of a different reason or unsatisfactory, were written back to the suppliers. Preparation procedure for written outward journal. Written outward journal were prepared when goods are overcharged or returned to suppliers. Then a debit note may be sent to suppliers by giving details of the goods and the reason of their returns. On receipt of goods returned, suppliers may issue their customers' business a credit note to reduce the amount owed by the business. When these credit notes received by the business, it is used to prepare written outwards journal.
Written inward journal. Written inward, or also called as sales return, is good written by buyer to the business organization. They are goods which were sold, but usually because of being unsatisfactory, and it were returned back by the customer. Written in accounting refer to the goods which is written by a business to its supplier or by a customer to a business. In one case, it is sales return, and in another case, it is purchase return. Sales return deduct total sales of a company, and deduction is shown in the trading account. The subsidiary book called sales return book is made to record all such entries.
Hi, my name is Izanurul Amni. I will present about ledger. What is ledger? Ledger, also known as the principal book of account. It is to record all the business transactions. The format of ledger is accounting sheet. There are three different types of ledger. First, sale. Second, purchase. And the third is general ledger.
This note will help you to insert the effect at debit or credit. This is a way of using ledger. Date is date of business. Type of business is for the transaction. Folio for reference. Amount is money at transaction. Sales or debtors ledger is a grouping of all accounts related that been sold on credit, which mean credit sale. Purchase or creditors ledger is purchase on credit too, and it means credit purchase. The effect is account payable. General ledger is the records all information for its various income streams and expenses type into separate accounts.